Hey guys, this is Brian, and today I wanted to go ahead and pick out some DMs that I think are helpful for people and just respond to them, upload it on YouTube, and then just make sure everyone can get value from that. As you know, or may have not known, I posted a little bit about after my vacation where I noticed that I was just getting so many DMs, so many long, detailed DMs, things that I used to spend a lot of time doing for each individual, but realized it was just taking a lot of my personal time and draining my energy, especially when I'm answering questions that I've answered for somebody else or that is maybe in my content. I was just being really overly nice, and it just, you answer one question, then there's another question, and it just keeps going. So just like my new policy now is just I'm going to take it a lot easier on that. So if I haven't responded to your DMs, that's why. But more or less, like, this is something that I can do, which is help as many people as possible with the questions that you do send in. Just you might not get a response from me right away or at all. Sorry. And if you want to ask questions, just ask something that I can answer really quickly, or that can direct you to where you may find the answer in some of my content. But let's just go ahead and get into it. So the first person says, "Hey Brian, how do you deal with missing out on a big move on a trade you're in but got out early? In my case, I was swinging some calls, made some really good money, but my best trade to date. But I didn't get out at my target and got out early for the sake of not wanting the five figures at risk anymore, although everything being risked was profit at this point. But for some reason, I'm annoyed and just can't seem to accept exiting early because I feel like there was meat on the bone for the last move I wanted. I totally understand risk management, and that was the reason why I exited, because I was not managing the risk on that trade properly. It was honestly affecting every decision I made being in that trade, and I couldn't even focus half of the time knowing I was still risking that much. So I know it's the right decision, but I can't seem to accept not capturing the whole move I wanted." Well, so in this example, the guy's basically saying, "Hey, I was having a really great trade, my best trade to date. I started thinking about the money, and for that reason, I exited before my price target, number one. And then number two, I feel bad about taking profit, even though it was a great trade, because there was more in the move." Well, what I would say is that, you know, number one, this trade means too much to you. Like, yes, we do have those big opportunities, and maybe that's a sign that you either sized in more than you normally do so that the money itself, just thinking about the money, influences your decision making with your system. That is honestly not the worst thing in the world, but I would say that you need to maybe reevaluate how your position sizing in trades and why this trade meant so much to you. Because personally, for me, like, every trade I take doesn't really mean more than the other trade. And for that reason, when I'm in a trade that's working really well, I can let it work and work and work until the point where I'm satisfied and I know that I've fulfilled my system. On the other hand, I give up profits quite often where it's way in my favor, and sometimes for whatever reason, like, it comes back and stops me out. And that full acceptance is just part of trading. Some people, they'll take partials and try to add it back on. Personally, I don't do that just because I'm looking for the bigger move, and by adding on later, knowing myself, my execution's not really great enough for me to capture, like, repeated attempts. Like, for example, if I'm shorting something, just like covering down, adding on the pop, covering, adding on the pop, etc., like that. For some people who are really good at executing, and if you know yourself well that you can do that consistently, not make emotional errors, etc., it can be very valid. And for the same reason in your trade, taking the profit off or taking some off, adding it back on and continuing towards your move would probably have been the thing that you could build into your system or bake into it so that you can feel comfortable taking that move. Because I know that, like, you're talking about swinging some calls. So it's like, in that situation, sometimes, it's all hindsight, right? Like, most of the time, you get out and you feel bad because there's more, or that there could be more, and you feel bad about it. But other times you don't take it and you'll lose all of those gains. So I can totally see how, like, in a swing situation, why you would care a little bit more, just because like it doesn't happen all the time, or if it does, it just there was just so much baked into it. So in the future, what you can do is take some or all the profits, find another way to get back in, and then try to ride it out to your destination, whether it's partial, risking a little bit of what you made, or you could even put it back on if you feel comfortable with that trade. But yes, in general, risk focusing on the money is just really detrimental to any type of trading, because that will influence your mind and it will influence the decision making you have in terms of your system. So the way I would have looked at it was, okay, I had a big win, but it could have been bigger because it would have went to my price target. Why do I trust my price target? Because my price target is not arbitrary. Like my price target, I determined in testing, back testing with my system that I know that has a high likelihood of hitting, and that in order to give myself like an A grade execution, I would have had to follow through with that. So that's something where you can just learn from in the future and just say, hey, look, if I want to be a better trader, I have to constantly be analyzing my mistakes. In this case, it is a mistake not to write out to your price target, unless, in certain situations that like you can actually sense that you got a really nice move and it's uncharacteristic for you to get such a quick and parabolic move, then it's fine to take it, because a lot of times those dramatic moves are met with even more dramatic, kind of pulls and against you. So like it's not really worth debating whether or not that trade was the best trade of your life or that you could have done better. It's just more of like take it as a lesson, because look, you took this trade, it's the most important trade to you now, but it might not be the most important trade in the future. You probably will experience more trades like that. Just look at it from the perspective of a professional athlete. Like you review the situation, you figure out what you could have done better, and then you just try to do it next time. If you fail, don't give yourself a hard time. Um, but I would hide my P&L. I would make sure my position sizing is makes sense for my account, so that like win or lose is not life changing. Because like when you start to scale up, right? At some point, like making more money is not like everything to you. So like 5 figures right now might be like hell yeah, but in the future you might be making 5 figure trades all the time. So just focus on the process, because getting lucky is great, but in a professional kind of trader's mindset, I feel like it's just about consistency, where you can just repeat that over again, bring it up to scale. And I hope that I'm reading this situation correctly, that it was an outlier kind of like, it's a big percent gain for me. It's a big move because the move just gave me the opportunity, versus like I oversized it, or I had so much conviction in it that I went big and I couldn't control myself, because those situations are different. And I hope that at least when you're listening to this, whoever you are, like you understand what situation you're in, and that apply whatever advice applies to that situation. Okay, so the next one is hey Brian, just had a read of your last post and wanted to show you a question. So I've hit the milestone of break even, which is nice, but I find myself having days where I trade the morning, as I usually do, make some money slash lose some money, and then I'm unwilling to take on setups later throughout the day, as I quote might lose my gains or increase my loss, end quote. All because I keep thinking back to my overall P&L for the month and my overall equity curve. I also find myself sizing down way too much if I end up getting involved in something. I know this is a bit of an open-ended question, but I want to know if there's anything you suggest to overcome this. At the moment, the market conditions have given very few opportunities for my setups, and I want to experiment with other ones, but I'm afraid that if I do it, then my equity curve will go back and affect my progress. Okay, so congratulations on break even, but you're still a rookie, right? Like break even is not consistently profitable. So you can't be so attached to the fact that you just hit this break even milestone and think that you cannot make mistakes anymore. Like you should still be making plenty of mistakes to learn from. Um, in my experience, like for your exact question, I would say like you can upload your trades into TraderView online for free, or you can track it yourself and just say, hey, look, like what times of the day am I performing at? And just cut out the fluff, or verify to yourself statistically, like, hey, this is actually, there actually are more opportunities in the day that I'm not capturing with my setup. And try to make that as objective as possible, because the problem is that you're feeling like you're missing out, or you're feeling like sizing down is bad, where I think in general for most people, not all, but most people, the more in the day that there's that passes by, the less opportunities that present themselves with a great like grading. Like they're not A setups like they are in the morning, and it's totally fine to just let yourself take those opportunities in the morning, analyze your statistics, and say it's not even worth it. Like I don't make any money later on. It's a different story if you do make money later on, or that there's opportunities later on, and that's where the stats are really going to come in. So I would just do the painstaking work there. Categorize your trades into like, this is the open, this is the afternoon, this is the close, and just figure out like what is true. It seems like you just don't know what is true, and you're going on your feelings. Um, Sizing down later on is fine, but again, like you're just reacting to your feeling, not what is objective. So going back to the objectivity is going to help clear your mind there. And you're saying at the moment, current market conditions give very few opportunities, and you want to experiment with other ones. I'm afraid if I do, then my equity curve will go back down and affect my progress. Well, with any new opportunity, you want to definitely not put on as much risk as you do now. So you need to work out for yourself, like what exactly is the position size that I'm comfortable with, where I can lose just hundreds of times. And it might be different than your main setup, but I mean, obviously it's fine to practice on something where the money doesn't mean anything to you. And again, why are you trading your equity curve? Like you cannot think about the money. If you think about being consistent with your process, having having a positive expectancy in your trading with stats, again, TraderView will help you with that, just to understand like, is this a high or is this not high expectancy, but this is a positive expectancy type of trading that I'm doing here. My winners are bigger than my losers, or your win rate is very high, etc. And then you can plug that into equity curve simulators online and determine, if I trade this way for 100,000 trades, will it be positive? Figure out, hey, um, I say it all the time, but it's like, you don't only just want your equity curve to go up, right? You want it to go up in a very, I don't want to say parabolic, but like you want to give yourself more mistakes, as you have fees, you have emotions, you're going to make mistakes. So if your system, when you plug into an equity curve simulator with your win rate, your average win, your average loss, etc., if it's just barely kind of like floating by, or it is going up, but it's, if you end up making mistakes, you're going to really, it's just not going to be great. So I would rather you have like a much steeper curve that looks just, it's more parabolic, and to just say, hey, if I even do 50%, if I do 70% of this, then I'm going to be happy. That would help a lot. And just the way to think about it is like, the stats reveal where you will be if you just do the right thing. So instead of thinking about how is my equity curve going to be impacted tomorrow or next week, you know where you're going. You just need to execute. So it's not a question of whether my equity curve will be positive. And that almost deserves its own video. But again, just go online and look up equity curve simulators, plug in your stats, recognize if you're going the right direction. As far as the new setups, it's not going to affect you that much if you risk smaller and just learn. The thing is, if you start and going into another system, you got to make sure that you're diversifying your record keeping and making sure you're labeling things correctly as a certain setup and not confusing it with your main setup, tracking that new setup as well side by side. It's a lot to do, but it's certainly doable. Just, it should be fairly easy for you to do that. But circling back to the beginning, like you're new, you just got to break even. That's not like that's great, that's amazing, but it's not like you haven't made it. So don't act like you made it. Humble yourself and figure out this is where you need to be. If you dip down, that's fine, because what's the worst case scenario? Of course, if you go dump back down, right? That's not as likely as you've gained experience. More likely what's going to happen with your mindset is you're just going to maintain the status quo, which is not where you need to be because you're afraid of doing the things you need to do in order to be what you want to be. So what actually is more important for you is to model yourself and make the decisions that are congruent with somebody who is going to actually do this for real and make money consistently, be profitable. Somebody who is profitable and consistent is not thinking about their equity curve at break even, whether or not it will go down. Just make sure you humble yourself, okay? All right, last question. Hey Brian, I've been in a state of frustration the past week. My setups are barely showing up, which makes me take weaker versions of my setup and trying to visualize the same outcome. Everything I take fails, and the plays that I hesitate on end up going without me. I've been on a 3-day red streak and 7 red days this month. Despite having only 3 green days, I am still green on the month, which makes me feel somewhat decent about my abilities to control risk, since I'm not fighting or revenge trading like I used to. However, I can't get the feeling out of my head that I need to make my losses back. The only times that I'm in a clear and patient mindset is after I take a huge loss, but after a while I get anxious again to make money. I'm starting to collect charts of perfect setups to remind me what to look for, but I'm wondering if you have any advice or tips. Okay, so this is like a very common issue people are having these days where their setup used to be presenting itself, and because it's not as frequent these days, like they're just freaking out or they're not unsure because they haven't endured like different market cycles. And of course, we've been in a very different kind of environment from the past 2 years where there's so much volume, so much opportunity. And to that, I always say, just look, you got to be patient with the market. Like, it's not something where your setup's going to show up all the time. Like, some days you will have to realize like the market is going into a depressive cycle or a very uh, exuberant cycle. And your strategies will work better or worse in either of those situations. So, in order to protect yourself, what you need to do is just focus on the quality setups that do come around, because they will come around. They're just going to be probably less frequent. But that's a really great time to just focus on your precision and focus on picking the right setups out of those, so that when it's more abundant, you're going to have the executional ability to perform. And it's actually just like a breath of it's just a breather here as we're relaxing. There was a point a couple times in the past few years where I was just like overwhelmed with setups. And I understand that like for some people that was great because they could pick out like, okay, there's like 10 setups, I could take like a couple of them and they're working. But I was able to almost capitalize on every setup, basically. I mean, not every single one, but a large majority of them. And sometimes I've had more charts on my screen and more level twos than I've ever had in the last couple 2 years. And it was very stressful. But the thing is, like, I could be prepared for that because I was doing the right things when it was slower. And if you, in your time when all your setups were presenting themselves, if you weren't able to capitalize on all of them simultaneously, then like this is a great time for you to really figure out exactly what is the right setup for you and what does it look like? How do I execute on it perfectly? And based on what you told me, where you only had 3 green days and you were on a huge, red, you had 7 red days this month and 3 green days, and you're still green. You're doing great. Thing is, like, you have to realize that in trading, sometimes not losing is what makes you more profitable than having bigger winners. And so, like, it's just a learning lesson where you have to just get so frustrated with yourself from taking these losers that you just decide you're not going to do it anymore, or that you're not going to take the risk on something that is subpar. So you're on the right track. Just again, don't focus on the money, man. Like, you're thinking about all the money that you could have made or that you lost and you're trying to make it back. When in reality, you're supposed to just be taking as a lesson, like, why am I losing money? What do I need to do to stop losing money? Which is means I'm not taking these crappy setups. Think about, if you didn't take 3 of those red days, how much more would you have been up based on your 3 green days? It's not about the frequency of your opportunity, because you're clearly waiting for your opportunity. It's more about not getting baited into the situations that hurts you. The thing is that, like, you're just in that phase where you need the emotional trader maturity, where you just decide it's enough. And for some people, the problem is they size up way too quickly, and they experience this when it's far too late, like when they have too much money on the line and they can't control it, and then they get in big trouble. I would hope that you're trading responsibly, size for your account, and that you can look at this as a learning opportunity. It's just a mindset swap, or you have to adopt the mindset of somebody who's actually, consistently profitable. In this instance, almost all these questions just revolve around the growing pains of trading. And it's like, you just have to learn through experience and hope that you can reflect on it versus thinking about the present moment. You need to really think about, hey, what do I need to do to be the person I want to be in, like, the next couple of years, versus like, man, I lost money today, or I lost money this week or this month, or things like just anything about that. Like, even in terms of gains. Okay, yeah, you had 5 figures up on that trade. That's your biggest trade, but like, there's gonna be more trades like that. It's gonna be, you're even gonna have like 6 figure or whatever. So for all you guys, the common thread here is just, you need to humble yourself, accept where you are, and decide that you're gonna take them as lessons rather than being defeated based on what's going on right now. Because right now, you're all still fledgling traders, I guess, and you may or may not like realize that, or take that as you should, and just respect that the journey is not going to be revolving around this like short-term mindsets. So very basic, just learn from your mistakes and have the right idea about where you are. All right, thanks guys. Hope you liked this video. Have a good weekend, everyone.